Wall Street is preparing for Bitcoin bottom out. Very important. According to Wall Street, the $69,000 is the most recent, very stable support level from which Wall Street is expecting people to chill, stop selling Bitcoin, and start loading the boat. Very importantly, today S&P is down, gold is down, silver is down, crypto is down. What the heck is going on? What happened with the hedging against the market? My Bitcoin friends, pay very close attention. Look at the expectation and the analysis from Wall Street. So according to them, $69,000 is actually a very good starting point for bottoming. According to them, the recent sell-off is showing weaker and weaker sell-off, less and less selling blocks of Bitcoins appear, meaning the people who usually crashes the prices use much more capital, much more liquidity. This time around, because people didn't bought the dip like they usually do, this is why the very thin liquidity, they didn't need to dump so much Bitcoin to crash the prices. Also, the longs were not buying, they were not going so much further bullish in the future, which usually causes the capitulation. And when you look at the heat map, you do understand where the longs are positioned. So according to the street, we believe crypto markets are in early phases of bottoming out following the last week record capitulation, which, if you're probably aware, if you look at the charts, you do understand the distribution of the positions. According to the street, roughly $10 billion in realized losses have already been locked from investors. These are people who were forced to sell, the ones who are using leverage, who went long. They have no choice to hold the bag like most people do. These massive capitulations, according to the street, typically occur only when final stages of sell-off is here. So this means that we're not in the beginning of the bear market or the crash or the sell-off cycle. We're not in the middle. We are actually towards the end. Why is that? Well, effectively, we all know there is a crash and there is some money to be made on the crash only when there are people who constantly buying, right? These people are shorting, Bitcoin falls, right? These people make money. But for these people to make money again, somebody has to come and buy it, right? So they have to short and make money again. If no one buys on the opposite side of the equation, well, they cannot make money, right? The only way for them to make money is actually for the shorts, for the bears to go long, which is something known as the bull trap. They make it look like, wow, the market is reversing, let's buy in. And then they dump massive 6-7 blocks worth around $600 to $700 million worth of Bitcoin, liquidating all the long leveraged positions, making another hundreds of millions of dollars. So this is how the market usually works. But don't get too hyped, don't trust 100%, or place your bets after the predictions or expectations from the street. The street have been wrong usually, and if sometimes they're not wrong, they're just not telling you what they really think about the markets. Anyway, so brief introduction of what actually happened. Bitcoin all-time high October, $125,000. Bitcoin has fell to 68,000. So you need to understand that the road from 68,000 back to all-time high of 126,000, it's huge. Versus the difference of silver fell from 120 down to 60, right? It's 50%. But it looks like it will be easier for the silver to go back to the previous all-time high. Same thing for the gold. It looks easier for the gold to go back to all-time high. But why, if it's easier, if it looks like that is more likely outcome, why nobody is actually buying the dip of these smart Wall Street investors? Maybe they know something that we don't. Why the market is actually looking, everything is crashing, like we said, the stock market crashes, the crypto crashes, the gold crashes. So Wall Street can buy anything. Why they be looking at the crypto markets? Why they're not buying the dip in the AI stocks? Why they're not buying the dip in tech stocks? Well, you do understand that the volatility and the potential delta of all of these potential reversal sectors have a different probability, right? So what is the likelihood of gold keep not only keeping the same hype, not allowing to go lower, but what is the likelihood of the gold or silver or the precious metals as a potential hedge to again push it or propel them back to all-time high? Remember, they hit all-time high when they still had the negative beta, when they were moving against the market. In the normal conditions, let's say 5-6 months ago, like today market crashes, crypto crashes, stock crashes, AI sector crashes, the dollar index crashes, but gold and silver, of course the oil, will usually go up. Everyone will be so proud of themselves. I'm a gold investor. I'm a hedging against the market. You see, my portfolio is green today. The whole market is crashing. But even these people today cannot say nothing. They just sit, they look, and they don't know what's going on, right? Because the gold and silver no longer operate as hedges, no longer have negative beta, no longer operate in the separate trading channel. They happen to lose all this. When did they lose this? When the speculators come over. Remember, originally gold and silver were purchased from countries. And when countries buy gold and silver in the historic standpoint, they were buying it just because for the local security and the economic reasons in the country, domestically. They were not buying to resell. When all the crowd came now to buy and resell, all the individuals, all the people with or without particular reasons to buy into the rally, now everything is speculation. So this is what actually ruined not only the value of gold and silver, but ruined the price action, ruined everything that was usually hedging against the market. Because the same crowd who buys stocks, AI stocks, tech sector, who buys crypto, who buys gold and silver, they're the same people who are dumping it. And the same pace, they're buying, they're selling, they're buying, they're selling. This is why there are particular stock market elements, instruments that are not allowed for individuals, because when the individuals show up, they completely mess up the market. They start buying spree, selling spree, they're messing up algorithms. It is really hard to predict the next move on the market. This is why gold and silver has lost what people usually own them for in the past. Now you should look gold and silver trading or having the value of crypto in some sense. The problem is that if there is a dip in both, why Wall Street still is willing to buy the dip in crypto, but not in the precious metals?